Hey, what is going on, guys? Edward here, back with another video. Thank you so much for being here again. Today I wanted to show you an easy way to spot what is called inducement or liquidity. It's technically the same, uh, but they have a few things um, like that can be a little different, and I will explain you exactly what it is, how to spot it, easily, how to spot it easily, and this will definitely help you uh, spotting order blocks. Okay. Now, uh, first, first, right here, and what you can see on these drawings right here. Normally, we'll see that the market will create some type of like you're gonna notice that the markets normally tends to be choppy. When you start seeing the markets are very choppy or indecisive, it is because they're building up liquidity. They are waiting for new traders, basically, newbies or retail traders, to start making positions and placing the stops every time, below a previous low or even above this previous highs right here, especially when you see like a double top, equal highs or equal lows. Those are areas, for example, this equal low right here, those are areas where the liquidity is sitting. Money is sitting below these lows, right? Because normally retail traders, they will look for buys whenever they see a double bottom. They will normally be looking for buys right there, okay? What they don't know is that a smart money trader, basically, in this case, will wait for the market to do that little trap, to do that little manipulation. The price will push up a little bit. These guys right here will be feeling very happy. The price pushes up and then drops. All of a sudden, boom, it stops them out. Okay, it get everybody out of the trade and then activates potential. There is a potential order block right here, demand zone, a strong demand zone where it's going to activate the buys. So, and not just this liquidity right here can also, like this breakout, when the price breaks this previous lows right here, to the downside, you will see, and it will induce actually. So this is why it's kind of like the same. But liquidity is the money sitting right here, right? And inducement is actually when the price breaks below, it will make new traders to actually go into a sell. It will induce people to actually jump in on a sell right there when they are seeing now, oh, okay, now market has broken this structure. So I'm going to be making an entry right there, and I'm going to be placing, I don't know, my take profit right here, right? So basically what's happening right here, this little drop, this little trap right here from the markets, it will induce traders to jumping into sales. What they don't know is that there's just an order block right here getting ready. There's a zone that we have, or buy limit orders to actually get activated and then push strongly the market to the upside. So if you don't know those, basically what inducement is, you can just go on Google and just literally just type in inducement. What is inducement? It's a thing that persuades or influences someone to do something. That's basically it. So when the market is breaking or is doing that little trap, like for example in this equal highs right here, right? It is equal highs. When the price is breaking this equals highs right here, it will also induce buyers to try to get in there, right? So they most likely will be placing, I don't know, maybe the stop loss below this low. They will be jumping in right there because they are seeing the breakout of this potential double top. So this is no longer a double top. The price now is creating a new high right there, technically, right? So they will go there and just go buy right there. It's inducing them. The same thing will happen in just in a simple structure. Sometimes, for example, in this setup right here, we see externally, hang on, externally we see just a push, a pullback, and a push, perhaps a pullback again, continuation, and so on, right? Perhaps some another BOS right there, right? That's what we can see externally. Now, internally, in this little movements right there, you see not all the time it's going to be just a straight line like it looks, let's say on a 1 hour, right? Maybe this is a 1 hour right here. This is a 1 hour externally, right? You got to push, pull back, push, pull back, push, right? This is how it looks on a 1 hour. But if you go in 15 minutes, internal, you're going to see a lot more movement. So where is the inducement right here? Normally we have a BOS, right? Normally this the breakout right here of this previous low, especially with the body of the candle closing below this low, so that counts as a BOS. If you see perhaps maybe the wick of the candle just closing below this low but not the body, that could be an inducement. Okay, that could be a little trap. So in here, just to show you, the inducement, where is the inducement in this case, in this continuation to the downside? Where would the inducement be? The inducement would either be in here, below this low, or above this high. Okay? Normally, the market can do this. The market can break. So you might think, oh, okay, there is an inducement happening right here. People might actually think that this is an inducement right there, right? And that could potentially be just liquidity. The market is just liquidating. Maybe it's going to touch an order block that is placed somewhere here to then go sell, just to continue to the downside. Okay, so I hope it makes sense, guys. Right here at this point, as I mentioned, above, we're gonna have above this high is the inducement. If the price does this, it's a trap, right? The market is inducing perhaps buyers to start jumping in, but it's just a little trap, or wiping these guys out, these sellers from this point. So it will cause that little manipulation. The market will go up, induce buyers to jump in, when in reality the market is still not ready to go up. The market is just, inducing buyers. It's a little trap right there before actually the market comes crashing. So I hope it makes sense. Again, liquidity is money, is the money that is sitting above previous highs or below equal lows, right? It's the stop losses from, from everybody, from traders, they're getting in, right? That's basically liquidity. Below lows, above highs, that's liquidity. And inducement is when the price actually moves, it pushes up, perhaps breaking a previous structure, little structure right there. It will induce buyers or sellers, whatever the situation is, to get into the chart. Okay. Right here, again, in this scenario, we have this external. Externally, it may look like this. We have just a big push and a pullback and a big push, right? So we have our BOS right here. Okay, so this is externally. This is how it's looking on a perhaps on a 4 hour. But now when we go on a 15-minute, it's looking a lot noisier. You see, you have a lot of noise going on in here. So in this pushes, little pushes up right there, you're going to encounter a lot of order blocks. You're going to find liquidity. The market will be building up liquidity as well. You see the liquidity, the market induces, it goes down, touches the potential order block before pushing up, so creates BOS. Again, price starts pulling back, little trap right there, little just pullback. Sometimes it's going to create a flag. Sometimes the price may or may not reach an order block depending on what's going on, how volatile the market it is, but it will always give us some interest. I will show you some examples now on the charts, but now you see that the market is breaking structures all the time to the upside. You're seeing break of structure until pretty much this point where the change of character is actually happening. This was the last BOS. It happened in the top. Market pulled back to a potential OB formation somewhere here, which is I'm going to specify now on the charts as well. So normally entering like that, maybe to a previous low, or if you want to aim to a previous zone, it's up to you, right? But now market starts actually shifting. Now right here potentially there's another order block. Right here on this pullback there's another order block. So it will always be showing internally. You can find several entries internally. Externally, you know that the order flow, it's either bullish or bearish. You know that the markets can be just, pushing up, now pulling back. Now, if you're seeing the market just showing you again another BOS and a change of character, you start getting prepared for buys now, because you know that like externally on a bigger time frame, the market has just finished the pullback, right? So after the pullback has ended, it most likely is going to show you some type of change of direction. So you can actually now be looking for buys instead of sells, right? Same thing here. Maybe it give you another opportunity here, and then so on. Give you another opportunity here to buy, and then so on. Another opportunity here, right? So you go from sellers to buyers now, right? We were looking for buys, looking for sales, looking for buys, right? So again, I hope it makes sense what inducement is and what liquidity is. Now, just go ahead and jump into the charts right here. This is Euro USD, and I wanted to show you this quick example right here, just to understand whenever we have an actual BOS and whenever there is an inducement, right? So you might think at this point the market is dropping, right? You see aggressively, where are the BOS? This is a BOS, right? You see a very strong momentum. This candle closed below this low, so this is definitely a break of a structure, right? Now again, this is the previous low. The market is stopped right there. Boom, you see a big ass breakout right there, right? You look at the size of the candle breaking. So that's definitely a break of a structure. Right here, previous low, you see that the body of the candle did close below. So yes, that is a BOS. That's a breakout of a structure. But what happened? Look at what the market was doing. It was very indecisive. At some point right here, even though after creating this low, look at what happened. This is the last low. The market is just like consolidating. Look what the market is doing right here. The market did broke below. Now it broke this low, but look where the body of the candle is. Like the body of the candle never broke this low, this most recent low. It didn't break it. So this is not a BOS. This is an inducement. Okay, this is what is called an inducement. So many traders can actually take inducement as a signal to buy. Believe it or not, whenever you see an inducement, it's a signal for you to actually, depending of course in which direction you're seeing it. In this case, the price went to the downside but failed. It's failing to continue to the downside, right? So the candles are closing above this zone. So retail traders, not retail, smart money traders, they will actually see opportunities to buy in this trap right here, in this inducement. Okay, the same happened right here. Look at what the market did. The market went up. You see what's happening here. This was the previous low or previous high right there. So the actual inducement to the upside would have to be like the market would have to break that high, like this high. It didn't break it. It just stopped right there. Now this order block wasn't the best. I will explain this in another video, but it wasn't the best. However, it did reacted really nice. The best thing we could have done in here would have been to just wait. Now look what I'm doing. I'm on a daily time frame. I'm just giving you this example on a daily. But look at what happened. What is happening there, right? That's another inducement that is happening in this case right here. The market could be just taking this liquidity also, right? So inducement sometimes may also look like a liquidity. And it is, in fact, because this may look, if I go on smaller time frames, this may look like a double top, like an equal highs right there. So yes, this could be money sitting above this highs right there. What the market did, it went up, right? Wiping these guys out before actually start crashing. But what other smart money traders would see is the inducement right here. The market did a little trap to the upside before actually coming back down. And this little trap actually left also a nice order block right here. I know It's a zone. It's a very important, it's a very big zone. But I normally said to my students that this could be just a POI zone, right? Doesn't mean that you need to jump in right away. It's a point of interest zone that you may actually be looking to sell, okay? Most likely finding entries in smaller time frames. You're not going to be jumping in on a daily, so you definitely need to go 15-minute, 5-minute, even 1-minute time frame, and I'm sure you will be spotting a nice entry here on a 1 minute, right? But knowing what is actually happening. Now you see where the actual BOS happens. After the market creates a new low, it created, of course, a new low, but the body of the candle did not close below the low. I hope it makes sense. So this is the inducement, and this is the actual break of the structure, because the market, the body of the candle did actually close below. So just to show you right here in this area, let me see if, just for this example for this video, I don't want to make this video way too long, but in this zone, I want to go in a smaller time frame to see how it looks in a 1 hour, to see if that inducement on a daily, it would give us an opportunity to actually go buying. So let's see, this is how it's looking. Remember, this is the zone that I just highlighted. Look at what's happening. There's another inducement happening here, another little trap. Now let me remove this. Look at the inducement that is happening here in this zone. Little trap. And right here, this inducement can be taken as an order block, and I will show you why. You can cover this entire candle right here now as the order block. Why? Let's go in smaller time frames. Let's go to 15-minute time frame perhaps. Let's see how it's going to be looking back on 15 minutes. We went from the daily to 1 hour, now going to 15-minute time frame to see how it looks. Right? After seeing the inducement, as I mentioned, some smart money traders, they will use inducement as a signal to either buy or sell depending on the situation, what they're seeing. So look at this, 15-minute time frame. What are you seeing here? This is beautiful. What formation do you see? Look at this nice aggressive buy. Of course, there's a lot more to this, all right? Using imbalances as a confluence. So where is an imbalance? We do have a nice imbalance right here, right? Nice imbalance zone that we always need to use in as confluence. But right there, you see the market is definitely on that huge week. Look at this, the previous candle before the big move, right there. So also just take a look at this. Now in this time frame, we're seeing BOS right here, last BOS, and this would be our change of character right here. So we have our change of character, we have our BOS, right? What the market is doing, pulling back to the order block and going by. So the position to buy would have been, of course, here, stop here, and TP in this case, because we were looking for that inducement on a daily, right? So we're technically looking for the market to go buying and pushing up very strong. But let's see how high. Let's try to go now to the 1 hour to see where we can aim our target. Okay, so let's go back to the daily. All right, if I know this is the inducement was happening here, right? I'm just gonna patiently wait for the market. Of course, this is on a daily time frame, as I mentioned. We have to wait and be patient for the market to give us the opportunity to buy in smaller time frames. But if you know that inducement is happening, that little trap right there, the market is not clear, it's struggling to break, like the body of the candle close below the low. So there's no change of, there's no break of a structure just yet on a daily. So price is struggling. So using that inducement, checking that little trap, those weeks right there, you can actually be looking to buy at least perhaps maybe to a previous high right there, or even to an order block that could be at the top. It's up to you. At this point, This would be a really nice buy right there. This was a 1 to 12 risk to reward position. But you see, you're using inducement to actually go for the buy. Now, let's clean this. And now let's go for this zone right here. We having another inducement right here, or liquidity taken right there. So let's go from the daily, let's go to the 1 hour now. Let me clean this one first. So market is taking the liquidity, it's taking these guys out, and it's touching a potential order block at the top. Look at what's happening. The market, now this is something that I will explain perhaps on a different video. This order block is still not that attractive. However, it is an order block right here. Right? So this could have been my actual either entry right here on a 1 hour, or let's see how it looks that zone on a 15-minute or 5-minute or even 1 minute. Sometimes we have to really scale in the smaller time frames to try to catch a sniper rifle. So let's see how it looks on a 15-minute. Yeah, I think on a 15-minute looks a little bit better. Right here. Even though this one, let's see, didn't touch. But you see on 15-minute time frame, which candle would you take? This is another thing. Some smart money traders, what they do, and this is going to be up to you right here, what I'm going to explain. This is up to you. Some smart money traders, if they see, where is the previous candle? The previous candle, right? This is a bullish candle before the big crash, right? We do have imbalance, which is nice. But the previous candle is this one, right? It's a bullish little pin bar right there, right? So many smart money traders will actually try to refine their entry, their order block right there, right? Now, some other smart money traders, they would choose the next candle because it's the one that has more volume in it. You can choose that one. Now, there are some other smart money traders now that they will use the Fibonacci basically to just make sure, let's see, to cover, to use the Fibonacci from this entire candle, the previous candle, right? This one right here, the bigger one with the more volume in it. So they're going to use the Fibonacci from the low to the high, and just the 50%. At the 50 level, that's where they are actually going to be placing their position. So, in this case, let me do this now. I'm going to use this little box right here, and I'm going to go this way, right here. Right, so they would normally do this. They will place the position for the sell or for the buy, whatever the scenario is. They will place their sell there, the stop loss here, and the TP okay to whatever target it is. But, you see, there are actually multiple things that you can do, okay? It's gonna be up to you if you wanna use the one right here, this one. You wanna use the entire candle. You wanna cover this entire, that entire body of the candle. If you wanna do that, it's also up to you, okay? It's more. It will depend on your perspective, on how you're seeing this and how much you're willing to risk, in this thing, on this, right? I know because now the risk is bigger on this one if you want to aim and make your entry at the 50%, or you just want to make your position at this candle. You want to just take this little candle. Yes, sometimes it's going to happen that you're going to miss the position. If you decide to go with this small order block right here, sorry for if you hear background noises that they are working in my house right now. So sorry for the noise if you can hear it. So anyways, right here you see that maybe this order block, it missed it. The market did not touch it. So it's going to happen. Sometimes it's going to happen as well. Also, depending on the broker you have, it may actually miss the position, right? It may actually miss it. So what is currently happening? Again, above these highs, above all this zone, we can actually just draw a straight line right here. And this is all liquidity. Above these highs, we have liquidity. It's money sitting above these highs, from early sellers. They're trying to sell into the market. The price will go up to wipe these guys out, activate an order block, boom, before actually going to the downside. So I hope it makes sense, guys, and I hope you're understanding now what inducement is, and also understanding the breakout of a structure, because you might think that a breakout of a structure is happening with the week, and that is actually called an inducement. The market is just doing a little trap to the downside, manipulation, just to go, in this case, to the upside, just to push up, just to have a little push, right? I'm not going to say, because look, also understanding that on the long term, the actual order flow is bearish. We're still bearish in the markets. So you can still have a short-term buy, okay? If you're spotting this, you can definitely have a short-term buy. And not just a small one. You see that right here, it gives you a 1 to 12 because the entry was done on a 50-minute time frame. Even if you go on a smaller time frames, you can even get a much bigger risk to reward ratio. So it doesn't matter. You can still go buying when you know the market is selling, right? Not trying to be too greedy into this thing, but hey, if you are able to catch this type of things and to understand how the market moves whenever there is an inducement, liquidity, and an order block formation, you can take definitely this to another level. So let's just continue, maybe just giving another example right here. You see that this is definitely a BOS. Like the market has closed low, right? The body of the candle did close actually below the previous low. So that's definitely a break of the structure. And I'm sticking to the, like right now, look at it, look at this also. I wanted to show you this example right here. And in this case, the market was actually going bullish right now, right? Now, we're seeing a huge aggressive buy. This is what I like about order blocks. And now I'm trying to be like very picky with the entries. I normally, if I see some type of aggressive buy, I want to see the order block forming. Like in this case, I want to look for a buy, right? So I want to see, in this case, something like this. The price is dropping. I want to see this. I want to see the market actually doing this. Right, let's say maybe the price starts dropping. Like that. So I want to see the market doing a BOS before it pushes up. So I want to see a break of a structure. Like right here, you see a little inducement. The market did have a little break of a structure. Well, it's not a break of a structure. It's an inducement. You see on a daily. I'm not just moving. I'm just still staying on the daily. The market had a little inducement right there. A little trap. Right there. Before actually the price pushed. Right here. So I was marking this entire candle as the order block. Why? Why this body of the candle? So weird, right? Why not this one? I'm going to show you why now. Let me go on a 1 hour. I was backtesting this, and let's see if it actually lets me to. Lets me go back there on a 1 hour. Is it gonna let me? Looks like it's not gonna let me. Let's go back to the 4 hour now. Yeah, no, I was backtesting this like for a long time now, but this was a nice. It was a nice formation here, and an order block on a smaller time frame in a 1 hour. It's not going to show me right now because it's way too far. So that's not going to work for this example. Let's go ahead and just jump into perhaps into an indice. Let's see. Right, let's try to go maybe a smaller time. Let's go 15-minute time frame, and let's see what we can catch. All right, let's see. Right, this is what happened yesterday. Markets are looking weird. I'm not sure why, but this broker is looking weird right here at the moment. Sometimes the candles just changes. I don't know if you have seen that before, but they act very weird. Strongly bearish. All right. Like this was huge right here. This drop was definitely huge, but the market decided to just continue pushing. It was some type of manipulation there. But this is looking very ugly right here, right now. Let's go to 5 minutes. All right, let's see. Just looking right here. Right here, this is what I'm saying, that you can have, sometimes you're gonna have some type of aggressive buys, not too big. I rather look for order blocks that have a nice, like the size of the candles are really nice, and I have imbalance. Sometimes, as I mentioned, you can take either this little one or you can take the one with the most volume in it. It's up to you, okay? I know that all scenarios are possible, okay? Normally you can take this little one, but other type of traders will actually take the next one, which is the one with much volume in it. So it's gonna be up to you. Depending on the day, of course, on what you're seeing, it is going to be up to you. These days were very, very choppy. This sell, for example, it wasn't that again, because I want to see, for example, in this type of order block right here, you might actually take it, right? But it's not a high probability order block. I normally, you see what's happening right here. You see the candle, the drop, you see normally this candle, the wick of the candle close higher. So it's higher right here. I want to see this body of the candle actually closing higher than this one, right? For me to take this order block a more, a higher probability order block. I hope it makes sense. But as I mentioned, you can still use that order block. But if you wanted a higher probability order block, you want to see the candle that is actually dropping higher than the previous one. All right. For example, right here on this one, you see before the big push, you see this low, this candle is lower than this one. So in this case, we're looking for a buy, right? So this is a little inducement right here in this zone, right? So that order block you can either take, as I mentioned, in this case, you can take the small one, or you can take the bigger one with the volume. In this case, because this is the one that had the inducement right here, you can actually take this one. Like right here on a 5 minute, the market did actually created this one right here. Nice order block, but it was never reached. The market never reached it. And you see why. You can actually see that it was not a high probability order block. Why? Because this candle, you need this candle. You need this candle to close. Hold on. This candle right here to close below, to close lower than this one. In this case, to buy, right? You need to, this body of the candle needs to close lower. So it has to close something like this. Right, you want to see the candle low. So you want the market to create that inducement right there, that little X. So putting it as an X. So anyways, guys, I hope it makes sense. You have to do a lot of back testing, but again, understanding this this market structure, okay, will definitely help you on finding the best order blocks. Okay, sometimes we're gonna have where the market is not going to be activating your order block depending on your broker, right? Also remember that every broker has different prices, and you know, by the time it's pulling back, it's getting to an order block that you might be seeing that is touching actually here on TradingView, but on your broker it did not touch it, right? So you're like wondering what the hell is going on. That's because of the broker. Every broker will give you different prices, so there's nothing we can do about that. Okay, sometimes yes, you're gonna miss the positions, but as long as you're doing and repeating this thing over and over again, you know, and just keep looking for this type of setups, is good. So understanding internal liquidity, right? When the market is consolidating or is building up, you see the market is very choppy, very indecisive, it's not moving anywhere, it's just moving sideways. You know that is something going on right there. And believe me, you want to stay out. Sometimes, as I mentioned, you don't want to trade when the market is choppy because you could be the liquidity. You want to stay out when the markets are choppy. When the markets are very indecisive, believe me, you want to stay out. Sometimes it's better not to trade, just to wait patiently for the formation. You want to see the liquidity. If you don't see the position, if you don't see the liquidity, you could be the liquidity. So eventually at some point you might be liquidity. So I hope it makes sense, guys. If it's necessary, watch this video a couple of times to understand, you know, the difference between liquidity and inducement, right? I hope it makes sense. Give it a big thumbs up. If you want to see more trades, if you want to see like a second part of this type of content right now, and just to make sure that you guys are understanding, okay? Thanks again, guys, for watching. I'll see you in the next one. Take it easy, guys.